Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Thursday, July the 28th, 2011. Well, a continuation of the trend to the downside today, and we have a candle once again that's made a lower high and a lower low. Yesterday's trading we had a very large red-bodied candle, a lot of downside momentum. Today, a much smaller body to the size of this candle, and that does suggest that there is potential for a change of trend here. The way that we like to see a trend develop is to start out with smallish to medium-sized bodies for them to get larger. And what we tend to see at the end of a trend is that the candle body size starts to reduce, and this candle body has reduced quite dramatically. Having said that, however, it's not good to see a drastic reduction all of a sudden like this, so it's not as perfect as if we saw a reduction over a few days. Obviously, there was such strong downside momentum yesterday that the bears really needed to have a rest, and that's exactly what they did for today's trading. That happens quite often when we see a trading period with such strong downside or upside momentum. Now, what we've seen is the market interact with the support level at 1300, and we've mentioned previously that the round number 1300 is a very, very important level of support for this market. So we've seen the market test just below there, and the sellers lose commitment as they traded just below that level. We also have support offered all the way through the cloud down to the bottom of it, which ends at 1290, and we also have this zone that we've highlighted in yellow, where we had a lot of downside price rejection previously in this market, and that area will potentially act as support, and that extends down to 1286. So even if we do see a breakout down below the cloud in the next few days trading, then there is a possibility that we will see support just below there. With this candle, this current candle, the sellers certainly are in control of this market, and they have shown good commitment on the trading day by closing down towards the low, where you can see that we have a very large shadow on the top of this candle, and that suggests the buyers losing commitment. And little wonder, the buyers were actually strong enough to test up above the cloud, and that's very strong resistance up around those areas, but they did lose that commitment when they were trading up around that area. So the sellers took control of this market by the close of the day. In Ichimoku charts terms, we're still trading within the cloud, so the market has a neutral bias, and we maintain our position below the Kijun-sen and Tenkan-sen, which means that the market is bearish in the medium-term and fast-term time frames. The Kijun-sen is still flat. We haven't seen the Kijun-sen start to point down yet, so it's not reflecting any solid downside momentum in the medium-term time frame at the moment. The same for the Tenkan-sen. The Tenkan-sen does tend to lag a little bit, but we did see some very strong upside momentum, and an equal measure of downside momentum is what we're seeing at the moment. If we look at this swing compared to this swing up compared to the swing down, so we're seeing an equal measure there. So that's being reflected in these indicators. So obviously for the next trading day, 1300 is all important. If we do see a bearish close below there, we may see significantly lower levels, but we do have that strong support down below, extending down to roughly 1286. If we see a breakout down below there, then there isn't any strong support until the market trades down to 1275. To the upside, obviously this previous area 1313 is important, and just above there at the top of the cloud around 1314, 1315 is very important if we do see a change of trend. But there aren't any good signs that the bulls are starting to gain any strength in this market. We would prefer to see some green candles before we suggest the potential for a breakout to the upside.